what's going on, guys? Happy Friday. Hope you guys had a fantastic green week in the markets today. Uh Kind of 50-50 on what we do next week. I'm going to show you what I'm looking at here in a minute. We'll try to go over what happened this week, what I'm looking forward to going into next week, and we'll try to break down today a little bit. Got kind of choppy this afternoon, but the morning was absolutely beautiful. We had a beautiful trade, so I'll go over that as well. So stay tuned and let's get right into it, guys. So obviously we'll start with the actually let's start with the weekly chart. Weekly chart, we see. Remember last week we formed this weekly FVG. Looks like we're going to close above that weekly FVG here. Obviously not the most bullish candle out of the FVG. We didn't even sweep the previous week low or high. I should say we swept the previous week low because obviously we entered that daily FVG. So going down to the daily, you guys already know this. I've already showed you about 50 times now but for anybody that hasn't seen, we hit 50% here on the daily. Going into the weekend last week, like this was our target for this week, and we end up hitting it on Monday. We see like we see this daily FVG wasn't really being respected, especially come Friday. We're just closing below, we're wicking below it, shows not a lot of strength. So where do we look? We look at the next higher time frame point of interest that the price is going to be, going after. Price is fractal. So if this is like a 5 minute or a 15 minute, we're always looking for those 50% retraces down to then look for a higher. Well, it's the same case here on the daily. uh so obviously we hit 50 here on Monday. We hit this daily FEG, and then obviously we're looking for a long positions out of there. And then obviously we got that. So Tuesday, Asia and London, we're kind of pumping up, and I'm like, okay, well, I know we have this up here. We have a daily BPR, right? We have the also the phrase of never leave an FEG behind. So it's like, oh well, if even if we are going lower, like even if we are going lower to like say, this is weekly 50%. So if we go from here to here, I'm just going to show this 'cause I'm going to talk about this shortly. Weekly 50% here is down to that 421 level, 19 for 421. So even if we are going down here, it makes sense to go hit this. It makes sense to go hit this daily FEG first. Why? Because look, 50% back up, 50% down sends us to 50% back up, and then potentially back lower. But we'll get into that in just a second. So then we go into a Tuesday, right? And Tuesday, I'm like, okay, well, if we inverse this a 4 hour, we are looking for? We have nice LRLR here, you know, and then like, what's all this mean? You have lower high, lower high. These are all failure swings. We know liquidity rest at failure swings because your newer retail traders are like, oh, it rejected here off a lower low. Like price should not come back here. Well, what's the algorithm going to do? It's going to attack those stops. So we know liquidity rest here. So Tuesday we expect like price to kind of run up here. We didn't quite sweep all of them. Remember we had the SMT ES hit 50% here, and NQ didn't. So and then it's like, okay, well, and then we go into like Wednesday, and Wednesday London session puts in this 4 hour order block. So wasn't quite expecting that. But you see 4 hour order block here. This candle closes below after sweeping liquidity. So it's a valid order block. So it's like, okay, well, price wants to move down now because we have that OB. So it's like, okay, what do we look for now? We got, what do we see below? We see a single 4 hour order block FEG sitting down here, and then we have what, we draw our 50%. It's like, oh, for a single 4 hour FEG sitting right at 50%. Price is absolutely going there. Then the order block confirm that. So look, we got the order block. Price came up twice right into that rejection block. The rejection block of an order block is just the close of that order block. So look here, the close of it, price wicks up into it twice, ends up rejecting back down, and then we get that 50% retrace. So Wednesday, going in, Wednesday, we take 50% during Asia session, and then London starts the reversal. Right, notice how the bodies respect that 50%. Right, so and then okay, so it's like, so coming into Thursday, we were bullish. Why? Because we're still looking for this daily this daily BPR, and then let's see, and then obviously we end up wicking into it yesterday. So so going into today, we end up, like, our bias is solely dependent on what happens with this daily BPR. So this morning we end up getting a lot of displacement through, right? We had PCE this morning, so we end up getting a lot of displacement through that daily. So it's like, okay, well, this 4 hours part of the daily, we're getting this strong displacement. We know we never leave an FEG behind. Look what happens. Price goes up to our final target. I mentioned this yesterday in the post market video and the AM preview. Like, okay, well, we need to be careful. Once price gets up here, it could absolutely reject. Everything is now filled. If price is like truly bearish, and like this is just a higher time frame, like 2022 model, where 4 hour broke structure down, we close below these last lows that sent us to a new high. That's your 4 hour break of structure. You get a 50% retrace back up into an FEG, the highest one, and then we push back lower. So if this is the case, we're in a higher time frame sell model. We just had a nice move up to 50%. We're looking at these lows as like a next week target, and then back to what I just showed you a little bit ago and told you to hang on for, was that weekly. So if we go to here, you look on the daily, boom to boom, go to your weekly. Your weekly swing low is down here. So you see I have it drawn right. Look where 50% sits, right at that daily FEG. However, we need more confirmation that this is like a higher time frame sell model, because let's delete all this. Get rid of all this, alleviate the confusion. This is, however, still a daily order block. All right, because this is any order block that's formed off like a sweep of liquidity. In this case, a 50% bounce out of the daily FVG. It's going to be short. It's going to be tough shorting into that. So we need to see more strong displacement through here to confirm this order block means nothing, and then we're indeed going down to this lower daily fair value gap. But in that case, going into next week, you see we have this low from Thursday, from Thursday. This was the low that hit that 4 hour 50%, right? So I think we draw down to here, and what happens here, I think, tells us whether we go down to that daily FEG next week or not. So the daily FEG down takes us down to 488 or so, but we could be looking at something like this as well. Before we go higher, now we get a 50% down. Maybe we sweep this daily low. Look what also sits here. Mean threshold of this daily order block, and then we could go back up as well. So look at this. Look where this daily low lines up on the daily order block. I'm gonna draw this for you here. Right at the mean threshold. Mean threshold just means the middle of the order block for your non-ICT traders. But look, so we could get like a sweep of this, take out those stops that are sitting down there, and then go back up. It's all gonna depend on what displacement we get after this low gets swept. But I do think we end up sweeping this low here. So going into next week, yeah, I'm just looking for this low. If we really displace through this low, then obviously these two relatively equal lows on the daily are going to get swept, and then most likely, if we displace through here, we get onto this a daily. Notice everything depends on displacement. Displacement will tell you everything you need to know about where price is delivering to, or wants to deliver to in this market. So with that, let's check out today. Obviously today we dug up into that 4 hour BPR is obviously this hourly BPR as well. You see here, but obviously we'll stick to the 4 hour and the daily one. We're looking for that higher time frame bias. And then what happens? So see here, this is where we dump up into it. We get our breaker structure here on the 15. So right here, once we get this closed below here, I'm switching to like a bearish mindset because we should not be closing below the last low that sent us to a new high. Otherwise, we are breaking structure down on the 15, as well as the 5. Right. There was a beautiful short earlier. I think that yeah, this is it. So this is a great example. You see here, 5 minute low sends us to a new high. And then we close below it. Once you get that, this is the same thing I just showed you on the 4 hour where I said break a structure down. We go back up 50%, hit the highest FVG. In this case, we didn't. There's still one up here, but we hit 50%, and then we continue lower. So the big thing is watching your closes on your swing lows and your swing highs. Those are your true market structure shifts. Somebody will just say like this random wick, like we'll close below this wick, and they're like, oh, that's a breaker structure down. No, it's not. It has to be the last low that sent you to a brand new high. But look here, we close below. So if you're bearish here, you should be looking at this and look what happens. 5 minute fair value gap right at 50%. It's a great short. A lot of people took this in the Discord because this is what we preach every single day. But and then you see we continue lower, and then as we're going throughout the afternoon, I'm starting to look at the hourly chart, and what do you see? You see this. Look, you have. Let's see. I need the brush. There we go. So look, you have swing low, swing low, swing low. That's really bad. But look here, you see a low, higher low, and a higher low. So you have a low, a failure swing, a failure swing. So you basically have like triple equal lows sitting down here, and like so there's gonna be a ton of liquidity here. So we in our PM stream we were like, okay, price should draw down here. We end up drawing all the way down. This hourly order block holds, and then we're looking for some kind of a retrace here. It doesn't mean we're going all the way back up, but like when you sweep liquidity like that, you're looking for some kind of 50% retrace, and then you see we end up getting that here, and then obviously we're going into after hours. But with that was today. That was this week, and that's what I'm looking forward to going into next week. As of right now, leaning more bearish. 13 minutes in. I hope I didn't keep you guys too long. Pretty long video, but with that, hope you guys had a great week, and we'll catch you guys next time.